is up, guys? This is Thick Teddy. Today I am here to talk to you guys about some beginner tips for trading and something that we can hopefully expand upon in the future. Make some more in-depth videos discussing and giving you guys some information. And today I'm here with Ant, and we're both going to be going over some things. A few things off the bat that we're going to talk about are a trading strategy, how you can kind of implement one, and how you can create one. Risk management, how you guys should prioritize that towards the beginning of your trading journey. Screening for stocks, why that is important, and reading a chart. So I'd like to welcome Ant.
What's up, everybody? I'm Ant, Tony, or Woo Trades on Twitter, whatever you prefer. Some things I'd like to go over with everyone is charting, how to combine charting and DD together, risk management, and not overextending into positions when you have a smaller account.
Okay, cool. So, like I said earlier, we're going to be going over these things pretty shallow today, and then me and Ant will be making more videos on them in the future. We collab a lot on Twitter, so you guys probably see a ton of us kind of kicking the shit back and forth on Twitter, and we do a lot of DD behind the scenes together in chats and stuff, so we'll kind of hopefully be collabing on YouTube a little bit more from here on out. So, starting off, strategy. Ant, what do you think is important about strategy for beginner traders?
The most important thing I think for strategy as a beginner would be to manage your risk, especially as a beginner and with a smaller account, because you're going to see people in profits of thousands and thousands of dollars, and that's just not realistic when you're starting off with a small account. You need to stack gains together no matter how big, and as you build your account, that 5% return at, maybe say it's $50, that 5% down the road will turn into $5,000 as you build your account and stay strict.
100% agree. I think risk management for a beginner is massive. Like, I know a lot of dudes who put their entire account on one stock because they don't really know what they're doing, and then goes down 10%, and they just want to be done trading because they don't really realize what's happening, and they just lost money, and they're on Robinhood, and they don't understand. They're just confused, sitting there, kind of like, I don't get what's happening. So, off the bat, risk management, you need to have at least a few stocks in your portfolio, just to begin with, like at least 3, I would say.
Yeah, you wanna make sure you diversify, but not to the point where you can't manage that. So I always recommend to people, I personally do this. I swing trade mostly. I'll only ever hold 3 positions max when I'm swinging, and I'll never put more than a fourth of my account into a single stock at one time.
Yeah. I am pretty similar. I do usually around 5 to 6 swings with a maximum of like 20% of my account, and then obviously the rest of it will be cash, other than that. But yeah, like I said, once you get up to more swings than that, though, you're kind of spreading yourself thin, and you're not going to make as much if a couple of them win and a couple of them lose. So you got to kind of figure out which ones you feel strongly. You like the setups a lot, and then you kind of have to go heavy into those, but not overly heavy.
Yeah, you still wanna. I always say to have a fourth of your account in cash at all times. Um, that leaves you room to average down, and I see some people when they're starting off, they want to buy 20 tickers at once. They want to buy 3 shares of something, and they're in 20 positions. That's 10 of those are going to hit for you, 10 of those aren't, and you're just going to be break even, and you're not going to be moving in the right direction. So like we said, you need to limit the amount of positions you're in, but you're going to want to go in pretty decently into those positions.
Yeah, I 100% agree. Like, just for an example, for anybody who's listening, if you're on my Twitter, then you guys definitely see AMTX. I feel really strongly about that one. I feel good about it. I feel like all the DD is there, the management's there, everything, the catalysts are there for the company. So, like, I have no problem having 20% of my trading account on it at all times. Like, I'll obviously scale out when it goes up and buy back in when it's lower, but I have 20% of my account, and I know that that's what I want because if it pops off, I want to have 20% of my account making. If it goes double, then bam, I've just doubled that money. But I also have some cash ready to buy a dip if it dips all the way down into the sevens, because I know that I want to average down and have the best price. So that's kind of risk management, which is a big part of strategy starting off. Also, something we can cover with strategy is whether you're a swing trader, whether you're a day trader, whether you're a scalper, whether you're an investor. So, Ant and I are primarily swing traders. So that means we hold a stock for a little while. If you're very, very new to this, a scalper is someone who, whether it's holds it for a couple hours or a couple days, they just want a small amount of gain. Basically, if they were to buy something, they would take a percent to 5% every single time and try to just compound that over and over. And then an investor is just someone who wants to make money down the line. Like they're willing to look years down the road. They want the long outlook of the stock. So that's kind of the strategies, the main strategies. And we'll make more videos going deeper into that. But so you wanted to talk more about screening, which that's the next step after strategy.
Yeah. So, did you say screening?
Yeah, screening.
Yeah. So, when you're screening for stocks, I personally, when I'm swinging, I'm looking for either post-offering plays. A lot of the times, I play a lot of bio, and they throw offerings left and right. They don't care if it's at
Yeah, they
midnight.
do.
They don't. They do not care. It doesn't matter. So I play a lot of post-offering plays. I like to play a lot of plays that are at or near support, historical supports. But that's kind of what I look for when I'm screening. We can go more into depth on how to screen and what parameters to look for and stuff, but those are just some of the basics that I look for.
Yeah, so I definitely agree. And there'll definitely be videos out with Ant will probably have a video about like showing supports and stuff, because over the time that we've collabed, he's really, really good at finding support and finding strong support. It seems like this dude can just pull support out of his back pocket. Like I'm kind of here thinking like, okay, I'm gonna find one using level 2, and he's like, oh no, it's right here. Look at this chart. So we'll get a video with him doing that, and we'll also have another video with screeners. So screening, just to start off, like I look for undervalued with a change in momentum. So I'm going to be looking for stocks that have gone down quite a bit, whether it's the last month or whether it's this quarter. I don't like stocks that have been going down for years as much, because that's kind of just a downtrend that's really hard to break. But if we have ones that have been going down for months or quarters, then I like ones that are showing a momentum change, which, like I said, we'll go into much more depth at a later date. We'll probably I'll drop a video with my exact FinViz settings for you guys. I've gone over them before, but and then maybe Ant can talk about his bio plays again, kind of the offerings, because they do like
sure.
to just like they really just think, man, our investors, like, I don't give a shit about them. I'm gonna 1 a.m. drop this. I hope they don't see it in the morning, type of thing.
Yeah, they don't care, and people get afraid of playing bio, but the best time to play is right after an offering. People are scared, like, oh, I'm in this position, and historically bio stocks will drop offerings randomly. But if you're in post offering, you're golden.
Yeah, or like sometimes those trials where they like come out with top line results and it's like trash results, or like even close to like what
Yeah,
people want to see, and then it drops like 30%, but you know that they have like 8 other drugs in their pipeline and like 2 catalysts coming up within the next month. That's
a lot
just
of the
like,
times too, people on Twitter see any filing and they immediately sell. They don't take the time to read. They think any filing's bad or any news that comes out is bad, and that's when you need to realize what's going on to take advantage of that.
exactly.
You need to be able to understand and differentiate when the time to buy in is.
Yeah, that's a huge part of strategy too, is just knowing kind of when a good time to buy is, knowing when it's hit too much of a drop for what the catalyst to drop it was. So a while back I played SPRT or SRPT, I can't remember exactly, but it was like $145, and then or 120, 140, something like that. I can't remember exactly. And then they had
Hmm.
one drug fail phase 3, and it was all the way down to like $80. So almost like, I think that's like 30 or 40%. But the thing was, is they have 45 drugs in their pipeline. It makes absolutely zero sense. Like, you just have to know kind of relatively where the company, how much it should drop, or kind of just like when it's saying like, okay, this is a little too much. Like, I think they've dropped enough for one drug being failed.
Yeah, you need to. That's what I touched on earlier. Is combining charting with DDs. You recognize the chart, you see, well, this has dropped a huge percentage. Then you got to actually take a little bit of time to go in and see why did this drop. Does this company, if it's bio, have more things in its pipeline? Are there catalysts coming up in the future? And then you can have all the confidence in the world taking a position as long as you can combine all those things together.
Yeah. Another thing with that too, I think combining the DD with the charting with all that kind of stuff in your trading strategy comes being able to determine if the company is a decent company or if it's a trash company.
Hmm.
Because personally, I have no issue trading a trash company. Like, I know some of the swings that I have been trash companies, but it's just a matter of like time frame and knowing, okay, this is purely a chart play. So like, this is purely because it has an inverse head and shoulders or something. Like, I can trade a terrible company if it's about to fill a gap. But if you're looking to swing trade for a longer period, you need to know that this company is decent, the management's decent. They're not going to drop you on your head at 12 a or midnight with an offering or something like that.
Yeah, I trade charts all the time where I'll trade the same ticker 5 times a week because I've played it for months. I know how it moves. It comes down to support, pops 50 cents, and I'll play it every week and multiple times a week, and make you can make a ton of money doing that just playing plays strictly off a chart. But when you combine those two together, you're golden.
Yeah, exactly. An example I can think of recently on that would be PLM. The chart was absolutely perfect with that squeeze pennant coming in, like long term too. It was like a couple months in the making. And
Mm.
then on top of that, the catalyst they have and their company having ties to Glencore and Tesla. Um, so like all of that combined is just a great example of like a company that we know has a great future. Also, with the chart lining up, it's perfect.
Yeah, you can be just about 99% confident in a play like that. You just need to be able to recognize and determine, is the chart right? They have catalysts coming up, and is it a decent company?
Yeah, so I think um, I think that's a good place to kind of fade out of this video because we've touched on a lot of cool things about strategy. So, like I said, we will be making more videos about these kind of things. We just wanted to give you guys kind of a straight outline of strategy, what it means, what are the options, what you can like get thinking about, what you can Google, what you can watch YouTube videos about before we come out with more. But we will be having quite a bit more in depth so you guys can follow along, so you guys can realize what we do on a daily basis, and you guys can kind of learn from that and take what you need from it, use what you need, and also if you find something that we do that you don't like, you can use that too because everyone's strategy is different. Woo, do you have any last words?
The only thing I'd say is exactly what Teddy said, and when you're first starting off, it can be incredibly overwhelming. So these videos are here to help you get started, help you understand that um, if you put the work in, you can do this too. And these videos are to get you moving in the right direction.
Yeah, exactly. So we just want to inform you guys and help you guys through it a little bit because it can be a swamp of information and lots of different information out there. A lot of people have different strategies, so we're just going to try to help you guys through the best we can. So thank you guys for watching. We'll be coming out with more within the next few weeks, within the next few months. So keep your eyes out, and we hope you guys gain something from this. And let's make some money.